Hello, everyone. My name is Jeffrey Kennedy, and welcome back to another episode of Market Academy. Now, what we're going to be doing today is we're going to continue our discussion of the ending diagonal pattern that we actually began yesterday. And specifically, what we're going to be looking at, we're going to be looking at some of the Fibonacci proportions, typical or common within this formation. And also, too, I'm going to show you a simple timing technique. It's not a rule, it's more of a guideline to kind of give you an idea on when you can expect the actual resolution of the pattern to take shape and form. So let's go ahead and get started. Now just remember, this is our core template that we work with as Elliotticians. There are 5 basic patterns which make up the foundation of the Elliott wave principle. Of course, we have our 2 types of motive waves, the impulse wave, which we discussed last week, and this week, the ending diagonal. And then, of course, we have our 3 types of corrective structures, the zigzag, the flat, and the triangle. And within the next week or so, we're going to be discussing those patterns as well. Now, just to kind of recap what we discussed yesterday, remember, an ending diagonal is just that. It is a terminating wave pattern, and it is limited as to where it may actually occur. It can form in the 5th wave position of an impulse wave, as I've diagrammed here, and also it can take the shape of wave C within a zigzag and or a flat correction. And then yesterday we talked a little bit about the formation of, remember, it is a 3-3-3-3 pattern, which means wave 1, 2, 3, 4, and 5. The substructure of each one of those waves subdivides into specifically 3 waves, that of a zigzag. So in other words, wave 2, wave 3, wave 4, those cannot be flat corrections. They must be zigzags. Now, what you'll see here are some of the, say, the Fibonacci proportions that I tend to encounter within a diagonal development. So we have our initial move up, which would be wave 1, and then we would have our wave 2. Again, 3 waves up for wave 1, 3 waves down for wave 2. Now, typically what I look for here is about a 618 retracement of wave 1, very similar to the Fibonacci guideline governing the depth of wave 2 within impulse wave structure. And then we have wave 3. Okay, wave 3 typically within an ending diagonal is going to be shorter than wave 1. Now tomorrow I'll show you a variation of the ending diagonal pattern, which is an expanding ending diagonal pattern. I sometimes refer to that pattern specifically as a unicorn because they're extremely rare as far as development. I think I've maybe identified 3 or 4 actual expanding ending diagonals in 30 years of actually, looking at price charts and counting wave patterns. That's how rare of a pattern it is, and that's why I call it a unicorn. But the type of ending diagonal that you're going to encounter the majority of the time is the converging type, where the 1-3 and the 2-4 trend lines actually converge and create what old school technicians would refer to as a rising wedge or a falling wedge. But as far as the rules and guidelines of the wave principle and what R.N. Elliott set forth, we'd like to see wave 3 be shorter than wave 1, and then on the 4th wave pullback, that's going to be about a 50% retracement of wave 3, and then we see wave 5, and then of course wave 5 is going to be less as far as it's going to be shorter than wave 3. So that way we have 3 shorter than 1, 5 is shorter than 3. This allows us to draw these converging trend lines between 1 and 3 and the 2-4 extremes. Now, one thing I've observed personally is what I like to see as far as idealized Fibonacci proportion within the development of an ending diagonal is I like to see wave 3 exhibit a 786 multiple of wave 1. And then I like to see wave 5 exhibit a 786 multiple of wave 3. Okay, you may want to write that down because I did not put that on the chart, but I'll show you some examples of exactly what I'm talking about. Okay, so for me personally, the idealized Fibonacci proportion between 3, 1, and 5, and 3 is a 786 multiple. So again, wave 3 will equal a 786 Fibonacci multiple of wave 1, and wave 5 will exhibit a 786 multiple of relationship with wave 3. Okay, so now let's move on and take a look at some timing techniques. Okay, now remember, this is a guideline, it's not a rule. okay? But typically, whenever an ending diagonal terminates, remember the resolution? What can we expect as Elioticians or chartists once we see an ending diagonal terminate? Well, we're going to be looking for a complete retracement of the move, actually even a little bit more. So we're going to be looking for a move down following the culmination of this pattern back to below the origin of the pattern. Okay, now this is the Aussie dollar ending diagonal that I showed you yesterday. Okay, it began here back in January of 2008 on 1 up, 2 down, 3, 4, and 5. It has the right shape, it has the right substructure. Now, what we then do is we take the time, the duration. Okay, so I'm just going to use my cycle tool here, and I'm going to divide the pattern into 1/2 and then into thirds. Okay, because what that does is it gives me, again, a guideline on when I can expect the culmination or the full retracement of the pattern to actually occur. So this point right here, ideally we fall back to below the origin of the pattern and 1/3 to 1/2 the time it actually takes the pattern to take shape. Okay, so if we're looking at a ending diagonal that takes, say, 10 trading days, then we're going to be looking for that ending diagonal, that complete retracement of the pattern, this move, this sell-off here. I'm going to be looking for this to occur in like 3.5 to say 5 trading days, or that window. Now, can it take longer? Yes. Can it take shorter? Yes. This is why this is a guideline and not a rule. So you can see clearly in this example of the Aussie dollar going back to 2008, where we did in fact complete the entirety of the height of the pattern, the length of the pattern. We did indeed retrace that move, more than fully retrace that move, in 1/2 to 1/3 the time it took the pattern to actually take shape. Okay, so let's apply that example, that of what we just learned, as far as how you can use a bit of, say, timing whenever you encounter the ending diagonal pattern when we look at the price chart of PayPal. Because remember, in PayPal, we're also working an ending diagonal as well. But this is, rather than a topping ending diagonal pattern, which you saw in the Aussie dollar, this is the type of ending diagonal which would occur in, say, a 5th wave position or possibly a wave C position, depending on how you want to identify the actual low here. But notice in this slide here, I've gone ahead and put on the Fibonacci proportion, the Fibonacci relationships, the Fibonacci retracements, and also to the Fibonacci extensions. So once we have our initial wave 1 decline, notice where wave 2 traveled to. Almost just right to the 618 retracement. So a lot of times when I'm working this real time for myself, I just put a little band between the 50% and 618 retracements. So typically this area right here is where I'll look for wave 2 of an ending diagonal to terminate. And then remember what I said a moment ago, the relationship I like to see, or the one I encounter most frequently, is a 786 multiple between wave 3 and wave 1. Well, that level comes into play right here at 5982. And that's where wave 3 fell to, a little bit below that level. And then we reversed up in wave 4. And again, we went right into that span of travel between the 50% and 618 retracements of wave 3. And then you can see the final 5th wave move down, clearly subdivided 3-wave structure. And notice once again, we went to just a little bit below the point where wave 5 equals a 786 multiple of wave 3. So I really like that 786 relationship between the impulse waves of the ending diagonal. And I like that 50% 618 retracement zone as the culmination, or your resistance and your support, for waves 2 and wave 4 of the pattern. So here in this slide here, I'm hoping to offer this up as an example of the Fibonacci proportions we tend to encounter within this specific pattern. Okay, now let's take the next step and apply the timing technique. Remember the rule of thumb? An ending diagonal will more than fully retrace itself in 1/3 to 1/2 the time it takes the pattern to actually occur. So what we do, we put on our little, say, our cycle tool, measure the duration of the pattern, and say this is about the 50% point. Okay, so now we're looking at halves, and then we can compress it. Now we're working with thirds. So if we can get back above, say, again, 103.03, which was the origin point of the pattern, then potentially we can see prices, achieve that level by, say, March 21 to 2024, or perhaps say by June. Okay. Now remember, I think sometime in February, late January, February, there's going to be another earnings report in PayPal. Perhaps that's going to be, an event that actually gets us a bit higher here, maybe to 75. Now again, this is not a rule, okay, but it is a guideline, and it's a very valuable guideline, one which we saw certainly applied or applicable in the Aussie dollar example. Okay, now I'm going to show you some different examples. These are not individual stocks, but here are a few other markets where I see this pattern, and because I'm seeing the pattern, I think it's a good example, a good learning opportunity. Now, here was an ending diagonal that recently occurred in the sugar market. Okay, we started the pattern here back in August, waves 1, 2, 3, 4, and 5. Notice it has the right shape. Okay, so what we're going to be doing here is measuring the duration of the pattern, start to finish. And if everything goes according to plan, we're going to see us trade back under the origin of the pattern of 23.42 and 1/2 to 1/3 the time it takes the pattern to form. So this would be approximately, say, half the period of time. I've gone ahead and marked those with vertical lines on your price chart. Here would be the 1/3 time component. Here would be the 1/2 time component. So if everything goes according to plan, following our little guideline here, we're going to be looking for sugar to trade back under 23.42 by either, say, December 1st, say, ideally no later than December 15th. And again, this is exactly what occurred and what unfolded in the sugar market. Now, another market where I'm currently, as we're speaking right now, where I'm watching the shape of an ending diagonal take place is in the cocoa market. This is a March contract of cocoa. And notice that the advance up from the low here that we saw, say December 6th, we began at 40.98, and notice the rising wedge, notice the substructure. It does have the appearance of an ending diagonal. And then with today's little spike up and reversal, we can make the case that the pattern is indeed complete. And just for, say, educational and entertainment purposes, let's just go ahead and say, okay, our ending diagonal wave 5 of 5 of 3 is complete. And it's complete at 43.34. So now we apply our timing technique. So we pull over our cycle tool, measure the duration of the pattern. We cut it into halves initially, and then we cut it into thirds. So if everything goes according to plan, we should be back under 40.98, the origin of the pattern, by saying December 26, or perhaps no later than December 28. Now remember, this is again a guideline. It's not a rule. Okay, I'm not going to be sweating bullets if it takes us into, say, the first week of January before we retrace the entirety of the pattern. What's most important with this guideline is, again, once the pattern is complete, the expectation is for the pattern to be more than fully retraced. Again, ideally, that retracement will occur in 1/3 to 1/2 the time it takes the pattern to take shape. Well, that about does it for today. Tomorrow we will kind of wrap up the discussion on the diagonal pattern, and I'm going to be introducing some variations to this structure, and that would be the leading diagonal, which we're going to discuss how it can occur in the wave 1 position of an impulse wave, and also as wave A of a zigzag. And then we're going to look at the variation that I spoke of briefly earlier, the expanding variety. Well, that's about it for me for today. As always, thank you very, very much, and I'll see you tomorrow.